Welcome to this next video where I'd like to share with you my process of clearing up a question that I had. Just to give you some background, I actually started my ERPNext journey by using somebody else's service. I was just a subscriber, and while that ended, it's a long story. Let's skip the detail. And I then started by installing my own systems, and I ended up here. So now I must re-enter all the information that I had, but the backup that was supplied, I did get a backup, but I actually picked up that I'm not quite happy the way I did enter the data in the first on the first system. I don't think I really got to know ERPNext well enough, and my type of transactions, how to handle that and how to set up the accounts. Anyway, long story short, I'm doing this all by hand. So obviously we go back to 2019, and in this whole process of going through a financial year, I did not actually close off the accounts. So my question is, what happens if I'm already like 2 financial years on and I now close the first one? Will it affect the others? That type of stuff. So I took my test system, which is still in existence, and I set up some transactions. I cleared the database, and I only set up one transaction. I set up 3 financial years, 2018-19, 19-20, and 2021. And I did one transaction in each financial year. And I did some closing vouchers. I think I only did on the first 2. Just to see what the effect is. Does the one affect the other one? That type of stuff. So let me share what I found with you guys. On this one, it's just a straight purchase. I made a mistake actually. I just purchased an item. Oh, I did actually put VAT in. Oh, I thought I didn't. Anyway, okay. Because why I want VAT is because you want some expense accounts to run up. According to the documentation, ERPNext takes the sales account, the expense accounts, and which include cost of goods sold, VAT. Well, my VAT is an expense account because I created a special one. I'm not VAT registered, so I'm not using the standard VAT. And yes, it's all legal. I did that on consultation. Anyway, so I wanted an entry in the sales account, an expense account, so that we can see what actually happens. All right, so here's my sales of my purchases, and I've also got a sales invoice that I generated. There's the sales invoice. Okay, just sold something. These are all fictitious prices and etc. Right, let's look at the journal, the general ledger. Okay, so there's the general ledger. Looks a bit confusing if you just look at it like that. But now let's look at the, let's say the VAT account. All right. Why am I not seeing anything? Oh, there we go. All right, so there's your 1, 2, 3 transactions. Ah, hang on. 1, 2, 3 transactions. You see I've already done period closing vouchers here. All right, so just ignore those for the moment. I've got a debit entry here and a debit entry there and a debit. That's your expense account. Your entries generally are on the debit side. Okay, let's just first look at what we are expecting. And on the sales account, actually, you know what? I made a nice diagram. Let's first look at that. I forgot about that. There we go. So I made a purchase 575. Accounting, buying, purchase, I think it was that one there. There we go, 575. We purchased something for 5 Rand. The VAT was 75 and total was 575. All right. And this looks like this. So you buy 575, 5 goes into stock in hand, and then the 75 goes into your VAT account, which is my account was 5112 or something. Let's just put the number there. Then of course you sell that item for 20 Rand. So your debtors has got a debit entry of 20. Your sales account, once it gets paid, is 20 Rand on the credit side, and of course your stock in hand now, that stock now moves to cost of goods sold, which is 5 Rand. So this is what your accounts look like. Okay, so we looked at VAT. VAT is 0.75 on the debit side. Let's just look at our general ledger. First the sales. Sales side is 20 Rand on the credit side. There we go, 20 Rand on the credit side. Okay, now we look at VAT. The VAT, forget about the others, only this one. That's 0.75 on the debit side. 0.75 on the debit side. And then cost of goods sold. Cost of goods sold. You've got, forget about the closing voucher, you've got a entry 5 Rand on the debit side, right? 5 Rand on the debit side. Now you want to wrap this up, okay? And the idea has been it cleans up the sales and your expense accounts. In this case, it's only sales and VAT and cost of goods sold. Obviously, if you've got other transactions like traveling and all the other expense accounts, it will do exactly the same. But this is sufficient to just see what it actually does. So how do you do that? You go to your closing period closing voucher list. There's a few closing vouchers which I created. How you do that is you say new and you enter the transaction date, and then of course and your posting date. Here you select your account and there you make remarks. Now just a bit of a warning here. You have to, the way I looked at it, if I did anything other, then it didn't work. So I'm just passing on what I saw is the dates must be within the financial year. So if you're closing off, let's say the 2018 year, what's the end of the 2018 year? It's 2019, the 28th of February. It must be within that time. So the last day, for instance, would be the 28th of February 2019. Okay, so that's what you would enter here. If you enter the 1st of March 2019, it'll close the next financial year. So and you might fill in here the correct year, but the moment you save, it auto changes that based on your dates. So just watch that out if you fill this in. Obviously, this account head, there's a whole, you can select any of those, but remember these things must be under your equity. All right. So under equity, you've got your retained earnings. If you look at your chart of accounts, under equity, you've got your retained earnings account already. All right, so it doesn't auto-select that, but from what I've read up and asked around at people in the know, that's the account you use. I know there was a discussion on one of the discussion threads that was looking either equity or liability, etc., but it sounds like this is the way it should be done. Okay. Right, let's get back to my general ledger. Now I did my closing voucher. Okay, and here's the closing voucher. You notice I did it on the last day of that financial year, and then it actually, that was the only entry there for that period. It takes that amount and makes a credit entry in here, right? And now, of course, it's going to debit the retained earnings. All right. Now, I can't show you the retained earnings. All it shows you is the result, the total. Okay, but now remember, this is a R5 credit, which is going to land up as a R5 debit on your retained earnings. Maybe we must just make a notepad file here. Okay, so this is retained earnings, debit, credit. So our first entry is a debit of, what was that? R5. That was cost of goods sold. So it's R5, and that was for cost of goods. Right, let's look at VAT. The VAT account was 0.7. Where's my transaction? There's the purchase invoice. So there's the transaction, and here's the closing period closing voucher. I must say it the right way around. So it credits this account to close off this account for that period, because now remember, for that period it's now 0. That's the whole aim, is to clear out your expense and your sales accounts to make them 0 for that period. So there's a credit entry here on the VAT account for 0.75. So on the retained account there must be a debit of 0.75 75, and that's for VAT. Right, next is sales. Sales. So for there, in fact, that was the only period I actually entered a sales transaction. There's your sales invoice. That was 20 Rand. So now we're clearing out this account. The sales entry is a credit. If we look at our chart here, the sales is a credit. So now we've got to debit that account to clear it out. Okay, so we debit that account with 20, and to balance this transaction, it's got to go onto the credit of the retained earnings. I hope you agree. So that is 0 there, and that is 20 on the credit side. Okay, so if you work this out, it's going to end up as 14.25 on the credit side. 14.25 total. Okay, so this is the balance of the retained earnings. 14.25, So let's look at our retained earnings. Retained earnings, and there you can see that was actually the retained earnings for the one financial year, but for this financial year, 28th of the 2nd, 2020, it's 14.25. Okay. Now, if you go and look at those accounts that we've been looking at again, you'll see that the subsequent transaction, which was done on the 12th of December 2020, was untouched. It's still there. That wasn't closed off. Okay. And that closing voucher only closed that transaction. So it seems to be safe to, if you did skip a financial year, to actually take it one by one and close them off. So there'll be separate entries in your retained earnings account for each closing that you did. I did 2 closings, that was for the one financial year, and that was for the next one, and it did the appropriate transactions. Only one, but it cleared out three accounts. So it does one entry into this account, which of course is the balance of all the debits and credits that it had to clear out. So it does seem to, you are still able to close a financial year off successfully without really upsetting any of the other transactions of the other financial years. Okay, well that cleared up a lot for me, or gave me some clarity of what I need to do to clear out my accounts. Hopefully that shed some light on this for you as well.